details. Hello, everyone. My name is Mo Zulfikar, and welcome to another episode of Income Investors. With me today is John Whitefoot. But before we go into any details, I want to let you know that anything you hear in this video is for information and educational purposes only. Investing comes with risk. To read more about it, please see the description below. High interest rates are not exactly good for most businesses. High interest rates make it more expensive to borrow, and no one likes to pay more in interest. Rising interest rates, though, are good for financial services company, and in particular, business development companies, or BDCs for short. This is mainly because they generate income based on the net interest margins, which is the difference between income from portfolio and interest expense on borrowing and debt. On average, over 80% of loans in a BDC portfolios are floating rate. This makes them well positioned to generate a lot of income in a rate sensitive market like the one we're in right now. Today's income pick, Bain Capital Specialty Finance Inc., traded on New York Stock Exchange under symbol BCSF, takes it to one step further. 94.8% of their around $2 billion total investment portfolio consists of senior secured floating rate loans. John?
Yeah, thanks, Mo. And that helps it report double-digit net revenue income growth, strong earnings, and increase its quarterly dividend by more than 23% on an annual basis. It also helps juice Bain Capital Specialty Finance stock, which is up 28% over the last month alone and 39% year to date.
John, before we go into details, I think it's important we talk a little bit about what BDCs are and how are they different than banks, because at the end of the day, banks do lend loans. How are BDCs different, and what is in it for income investors here?
Those are good questions. At Income Investors, we actually refer to BDCs as alternative banks. That's because they operate like traditional financial institutions, but unlike regular banks, BDCs don't serve the general public. They have no branches, no ATMs, they don't provide mortgages, checking accounts, or credit cards. That explains why they've remained one of the best kept secrets on Wall Street. Instead, the BDC industry has carved out a lucrative niche in the financing marketplace, which is small and mid-sized companies. These companies need more funds than those typically provided in a traditional bank loan. Wall Street also shuns this group as they aren't large enough to go public. So BDCs sort of fit into that sweet spot of the US economy, businesses that fall into the huge gap between commercial and investment banks. Now, when we say small and mid-sized companies, I'm not talking about your local corner store or diner. BDCs typically lend to companies that generate between 20 million and 100 million yearly in sales. And there's been some really well-known companies that have enjoyed the benefits of BDCs. That includes Rug Doctor, Smashburger, Impossible Foods, and Lucid Group.
John, I'm just going to step in here for 1 second here. While BDCs are lifeline of businesses that need influx of cash, they're also boon for dividends hogs. Another great thing about BDCs is that they legally have to pay at least 90% of their taxable income to investors as dividends. That's a key difference between your regular banks and BDCs. John, if you want to continue, sorry about that.
Yeah, no, that was good. And the yields actually can be quite high, averaging 10.7%. That's more than twice the yield of the broader financial sector and significantly higher than the 1.5% average yield on the S&P 500.
And John, now let's talk about Bain Capital Specialty Finance Inc. What does this company do?
Yeah, Bain Capital is a BDC that specializes in direct loans to middle market companies in North America, Europe, and Australia. It typically invests in companies with EBITDA between 10 million and 150 million. And the fund seeks to invest in senior investments with a first or second lien on collateral, senior first lien, mezzanine debt, etc. Its diversified portfolios invested across 142 companies across 30 different industries. By industry, its largest investment includes aerospace and defense, high tech, business services, consumer goods, healthcare and pharmaceuticals, and transportation. Now, the weighted average yield at amortized cost on the investment portfolio is 12.8%.
And John, I was reading on incomeinvestors.com that their third quarter net income jumped 20%.
Yeah, for the third quarter of fiscal 2023, which ended June 30th, 2023, Bain Capital announced that net investment income climbed 20% quarter over quarter to 38.9 million or 60 cents per share. Total investment income inched up 1.3% sequentially to 75.7 million. Meanwhile, third quarter net income per share was flat quarter over quarter at 45% or 45 cents, but was actually up 66.6% over the 27 cents per share in the same period last year. No, for the 3 months ended June 30th, Bain Capital invested $197.5 million in 46 portfolio companies. This includes roughly $120 million in 6 new companies and $47.7 million in 39 existing companies.
Let's talk about the most exciting part here, the income. This company raised its quarterly dividend by 23% year over year.
Yeah, it's a result of the company's strong earnings and continued stable credit performance across its highly diversified portfolio. Bain Capital's board raised its annual quarterly dividend by 10.5% quarter over quarter and 23% year over year to 42 cents per share, or $1.68 on an annual basis, for a pretty massive yield of 10.91%. For context, the U.S. inflation rate has inched up to around 3.1%. Perhaps equally as impressive, the dividend board boost represents the third increase for shareholders in the last 12 months. And with a payout ratio of 83.4%, there's certainly room for Bain Capital to increase its payout over the coming quarters. Bain Capital stock also has room to run too. Strong earnings have been helping energize Bain Capital stock, which is up around 39% year to date. Bain Capital actually hit an all-time high of $15.85 on August 10th, and it continues to have great long-term growth potential.
John, thank you so much for your analysis. Just to recap, Bain Capital Specialty Finance Inc. continues to be a great BDC that is throwing off a lot of money. It's reporting strong financial results and has raised its high dividend 3 times over the last 12 months. Thanks to high interest rates and its senior secured floating rate loans, there is every possibility that it will raise it again in the near term. That's it for today. We'll be back with another video soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.